Hey, Foxes. How's it going? That lo-fi music is always such a good vibe for like a overcast, wintry kind of day. I love it. Anyway, so I think we get kicked off. Welcome to another iteration of the Tokenomics chat. Let's see. Let me change the title here. Office hours to me always sounds kind of scary. Like, you guys remember, like, being in college and you have to go to office hours because you're taking like, Calc 1 for the third time and you don't understand how this freaking thing works. So you have to talk to the TA. To me, office hours has a negative connotation, so I prefer to avoid it. We'll just call it Foxonomics. Okay. Welcome everybody. This is, as usual, this meeting's hot on the heels of our Treasury Management and Diversification Committee chat. Just wanted to quickly reprise what we were doing there, a quick update. Specifically, we one of the things we talked about, in addition to some of the things that we'll discuss in this meeting right now, Danielle is back. Welcome back, Danielle, and Al. Welcome back. She pointed out that the current phase of the TMDC, kind of the initial trial phase, is actually ending in mid-February. Of course, it was a governance proposal that brought this into that created this. It was roughly around the same time that the tokenomics workstream was officially created. These were separate, but kind of related things. So we'll need to be talking about what's going to be in the next phase, specifically kind of like carving out okay, how much time do we think it'll take? Should we still have 5 members? Should there be compensation? I think there's a very strong argument to be made that the Treasury Committee should be compensated, much like the Bond Committee is compensated for their work on Olympus. What that exactly looks like, I'm not sure. To clarify, I will not be taking any compensation on the TMDC as the work stream leader, but I do think people contributing certainly should have the option of being compensated. Currently, it's Danielle, Professor McCarthy, Rotorless, and Al. Thank you so much for your work so far on this. I think it's really helped, and of course, me on the committee. In terms of where we're at, what we're looking at, there's 2 governance-related things that I wanted to start off with because these are active. They're happening now. They're even kind of like time-sensitive in the sense that they're moving through the governance process. The liquidity mining, the next phase of our liquidity mining, that strategy, that proposed strategy is outlined in a proposal that has actually gone live on chain. It's live now. You have a week to vote on it, so check it out. As a reminder, what this, the TLDR is basically, this extends our current liquidity mining program, but accompanies that with a aggressive purchase of our own liquidity tokens via our existing ETH to Fox Olympus bond. So the goal there is basically, we're not rocking the boat, we're not destroying our liquidity and upsetting incentives and giving market participants a nasty surprise by abruptly ending our liquidity mining program, but at the same time, we're actually putting ourselves on the path to sustained protocol-owned value. We're going to, upon the completion of this, we should be in a good position to start weaning ourselves off liquidity mining, and then we don't have to deal with, mercenary, low commitment liquidity anymore. So generally, this got a ton of support in the ideation phase, the draft and ideation phase, and now it's live. This is, I can't stress this enough, this is a very important, critical sort of building block of our overall tokenomics strategy. This is a big one. We spend a lot of money on liquidity mining. We also, us owning our liquidity has a lot of benefits. So if this strategy is effective, then this could be a big win. On the other hand, there could be an argument for, you might say, well, maybe we should just actually start winning ourselves off liquidity mining now. Perhaps you have a different approach, but it's up to you ultimately to decide whether to support this. So before I move on to the next topic, does anybody else have anything to add on that? Actually, Rotorless had a wonderful question earlier. Was wondering if you are LPing, and this is pertaining to governance in general. If you're already LPing somewhere, can you, or like in our Uniswap, can you participate in governance? You can actually. Snapshot is sophisticated enough where you can, even though you're LPing, you can still vote, which I think is great because that's very much in the spirit of voting. You're actually still taking part in the DAO's overall tokenomics, and in a way you're supporting the overall community by doing that, making it more useful, making the token more useful, adding to liquidity. So I'm glad we have that option for voting. But yeah, I'll give it a sec if anybody has any questions about this proposal, because it is a bigger piece of the puzzle here. Okay, great. So moving on to the next piece. It's just been a steady drumbeat, but one of I'd say the number one priority in tokenomics is to get us stablecoin exposure. This is as a hedge against a bear market in Fox. As the market in general continues to weaken, and at a macro level, it seems like both the TradFi markets and crypto markets are pricing in a environment where rates are going up, and investors are maybe at the far end of the risk curve where crypto is. They're getting a little bit more risk averse, and you can see this in the indices dropping as well as crypto. There's always risks out there, but the bottom line is, we need to be really hedging ourselves against further price depreciation. So one of the ways to do this is, this is kind of falls into the DAO to DAO or D to D category, as I like to call it. But what if we could partner or come to an agreement with a stablecoin project whereby we exchange our own token for some stablecoins? This is essentially, or this is exactly what we've done, or what we have proposed with the tribe community. And this is one. It actually really excites me how well this is going so far. This isn't a done deal by any means yet. And one of the challenges is we have to herald this through two governance processes, not just ours. But just as a quick reminder of what this is. We have this existing relationship with Rari. We have our Rari pool that is just super important to our own functioning. We've used it 2 months in a row for payroll. We also are involved with FAE and their liquidity as a service program. And those two projects have recently merged. So, given our close ties with those teams and the fact that we've already integrated, or we're already using those two platforms, we thought it could be a natural fit to approach them and say, hey, what if we swapped X million Fox for X million FAE? We would get stablecoin exposure, which of course is very desirable, and the tribe team. That's kind of how you can kind of think of the United Rari and FAE projects as just tribe. They would get, they're naturally diversifying their treasury by holding Fox. They get, exposure to all the cool shit we're doing. But in addition to that, we also outlined some very specific ways in which we could actually integrate the product. The product team has actually even worked on some comps for having like an inline sort of flow where users of our platform are presented with the option to use Rari pools. So in other words, we really wanted to make this a mutually beneficial thing where it's like, in addition to just having more diversification, holding our token, the tribe community is really like, able to leverage our platform in a way that can really help them, We want to help them continue to grow and do awesome. Another idea is we could even actually incentivize Rari pools with Fox, which that was a suggestion they made. We're completely down with that. So really trying to, articulate benefits for them that, we think this is a good idea. A lot of the people on their team are very much in favor of this. So where it stands right now is we started out by creating, kind of a draft proposal of sorts on their governance platform, on their forum. That will soon be moved to their own, I guess you would call it ideation. It's sort of like their version of ideation, but it's actually on chain where they will be voting on, are you in favor of this? And if so, would you like the token swap to be 2 million, 5 million, or 10 million for both sides? So on our side, what I've done is I have moved this proposal from draft form to ideation. And what our proposal entails is approving up to $10 million worth of a swap. So up to 10 million Fox for up to 10 million Rye, or I'm sorry, Fei, wrong stablecoin. The reason we did that is just to give them flexibility, or give us enough flexibility, kind of leave it up to them in terms of what to choose. I personally would be down for up to 10 million. We'll see what they choose, but yeah, keep an eye on that. It's in the ideation phase on the forum. Kind of what in terms of risks. I mean, every stablecoin has its own set of risks. I would not want us to hold, like only one token, only one stablecoin, because then we're subject to all those risks. I wouldn't want us to have all of USDC, all of Fei. We want to spread that stablecoin risk across various stables because they really do have such unique risks. And I think by doing that, we can sort of really create a nice diversified treasury. Yeah, that's kind of where we stand on that. Give that a look. After a few more days, we'll be ready to move that to on-chain voting as well. We'll just have to harmonize that with what Tribe is doing. It's kind of cool to jump into both communities and be moving this through. But I will say that there does seem to be a good amount of support on their side, especially with the people kind of most directly involved in the project. So that's been really exciting to see. Next, we have another initiative to raise stablecoins. This is active right now, and this is on the USDC side, and it's going well so far. So this was basically we created a Fox to USDC bond on Olympus Pro. Initially, it was for 1 million over the course of a month. That actually was going so well initially, and in addition to that, these other efforts to diversify our treasury or hedge our treasury have taken longer as the market continues to weaken. So it made a lot of sense to, given that good initial feedback and good initial response from the market, to double that amount to $2 million. So currently, that Fox to USDC bond is $2 million over the course of a month. So every single day, we're streaming in, around 65K worth of value, worth of USDC into our treasury. That, depending on how things are harvested, it might not go directly into our treasury, but effectively we're getting that exposure. So that's wonderful to see. I certainly will sleep easier at night once we have more stablecoin exposure. So two interesting things. One is relating to kind of like making sure that we don't overdo it. And this was a point raised by one of the Olympus people, one of the OMIs, is like, if we're issuing too much of a bond, we could suppress the price. That's one issue. There's also, and this is something I just wanted to bring up because I feel like there's been sort of a lot of confusion about what's going on. If you look at crypto Twitter, there's a lot of schadenfreude right now about Olympus because the price of their native token Ohm has just completely shit the bed, for lack of a better term. It's had a very rough week. it's been a downtrend, and it had a precipitous decline. I think in a way, people were kind of maybe waiting for this to happen, because they kind of, the whole like 3,3 thing was a game theoretical way of saying, like from a prisoner's dilemma perspective, like things go great if you never sell. And of course, no, a lot of people are selling. Maybe they kind of position themselves for some flack. But the important thing is, like, this project is still live. We've been dealing with these people. Also, and this is the most important thing, is we have no direct exposure to Ohm via these two bonds, via the Fox to USDC bond and Fox to ETH bond. So, even though Ohm has weakened, that does not impact the operation of these bonds. I will say that, like, okay, let's say if it dropped another like 90%, I don't know how that would impact the functioning of these things. I don't know how the Olympus Pro community is. I haven't actually looked at their treasury. That's probably a good idea to see how are they diversified? Can they survive even more selling? But mainly my main point here is, regardless of what Ohm is doing, the project is still functioning, and we don't have exposure to that. If there were signs that somehow the project was actually in dire straits, people aren't working on it anymore. Something like that might be an indication that we should, go back to that proposal I talked about, with respect to the LP purchases, and be like, okay, well, maybe we need to find another way to handle this. But I feel like this is worth mentioning, just because there's been so much, there's been a lot of like sort of hype and schadenfreude about this. Willie, do you have some thoughts?
I do. I figured I'd jump up to talk about that question right there of like, could Ohm drop 90% and what would happen? And it's pretty cool. I went to their homepage, olympusdao.finance. So something interesting is that Ohm they have this reserve of assets backing them, and that's always been a big part of what makes them unique. And the bonds that we're using is that they're taking in not only a bunch of their own liquidity, Olympus and ETH liquidity, but also even assets like Fox get added to their reserve. Whenever we sell bonds, they get a little bit of Fox added to their treasury. So Fox is actually one of the many assets that is in the reserve backing Olympus. And when I say backing it, it's in this DAO reserve, it's their treasury, and Ohm holders control that reserve. So effectively, they can choose what to do with it. And that's why it's kind of similar to, backing for a currency. Certainly more of a backing for a currency than dollars have, right? Because they're not backed by anything but faith in the government and the Federal Reserve. So Ohm right now, its treasury balance is $610 million. And the fully diluted valuation for Ohm right now is $1 billion. So the treasury balance itself, which although I'm sure some of that is Ohm, so we need to look into the specifics of their backing, but you could see a floor or speculate that there's a floor to the Olympus price based on the assets that are backing it. And actually, it does look like they're getting rather close to that floor right now. So I'm hoping, maybe we'll see a bottom. And but to your point, even if Ohm does keep falling, that doesn't affect these contracts that we have deployed. Those contracts are coded. They will keep doing what they do regardless of the Ohm price. Even if the Ohm price went to zero, that would not impact our contracts, although we might need to look into then adding or providing our own UI for those contracts, which happens to be something we're already looking at.
It's interesting that their sort of fair value, or the price has actually dropped to what that fair value would be. I remember when it was trading above like 1,200, thinking, man, that's a big premium compared to the assets they have on hand. But now that it's kind of down there, maybe you might expect the price to rebound. But in any case, they have, it sounds like, substantial backing to continue to function. I wonder if they have a decent amount of stable coins as well. I imagine they do, just because there's different bonds. One thing I just wanted to add, I see you, John, as well. But really quick, there could be a case to be made for adding or taking out insurance on Nexus Mutual, since we'd be more exposed to this. Because in my mind, that's the one thing that really could screw the pooch on this one. It would be a really bad day is if Olympus got hacked and we have a lot of Fox in that Fox to ETH bond. So that could be an option moving forward. Again, I'm not saying that I think that would be unlikely given where we're at. I don't there's no indication just because the price is dropping. There's absolutely no reason why they're going to have smart contract bugs. But that's kind of just a little tangent that just occurred to me. What are you thinking, John?
Yeah, I was just going to comment that they certainly do have relatively large both stablecoin, ETH, and now WBTC and other non-native asset parts of their reserve. It's actually, I think, a large part of their reserve, in addition to their own liquidity and stuff like that. So I would just echo kind of what Willie said. I don't think it's something to be concerned about from our bond level. Yes, the contract risk is always there, but we can also control that in that we can actually pull the DAO multisig has the ability to pull out of those contracts unless something happened to drain them or something. But no one else really has any sort of rights on those contracts other than our DAO multisig. So I think that's a pretty low risk at this point. Agreed.
And one other thing worth mentioning is, anytime you're dealing with a DeFi type project, it's at least in my mind, one of the important things to look at is what's the team like? Are they responsive? Are they transparent? Are they willing to embrace when things get shitty and deal with hard things, or do they get defensive and sort of try to pass the buck or not acknowledge things are going wrong? I will say that in our own dealings with the Olympus team, they've been great. They've been very responsive. They articulate things very clearly. They've been very open about, different, helping us with different parameters. That actually feeds into the next discussion about Olympus. But the team has been super responsive. And that to me is always a good, of course, there's no guarantee that a project will remain viable and everything will go well, but it's always nice to see. Decentralized Jay, he says, or they say, Ohm Treasury is a third DAI, a sixth Frax, and a sixth LUSD. So interesting, Frax and LSUD in addition to DAI. So right there, that's a good amount of stablecoin diversification. Not just that, but it's actually diversified across 3 projects. Thanks for pointing that out, Jay.
I think I like your comments about the Olympus team. Again, just want to echo that. And also, if you guys remember their AMA we did with them, it's just one of the strongest communities I've ever encountered in the DAO space. So, and I think that's a great way to look at any kind of DeFi project is look at the team, look at the community, if you're making long-term bets, and not financial advice, of course, but I know that's definitely the lens that a lot of investors look through. Is they could care less about the actual project or the revenues when they're making an early stage bet. They care about the team basically. And with DAOs, you can extend that to the community. And they have a great community, and I think we also have obviously a really, really strong community. And that's what makes me bullish is communities. And that's one really cool thing about DAOs and DeFi and stuff is that you can just hop into a Discord and chat with the community and see it firsthand, see how if they're getting stuff done and if they're having good discussions. And compare that, that's one way I love doing diligence in these projects is just hopping into their Discord and seeing the community in action, asking questions and seeing how quick you get a good answer. And compare that to the Polygon. I love Polygon, but it took us, months and so many outreaches just to get them to update an incorrect icon on their app, and we could not get a hold of them. So yeah, just cool stuff to think about as you guys are doing your own diligence on these different protocols.
Yeah, absolutely. It'll be interesting to see. I don't want to deviate into a price discussion, and certainly this is not investment advice, but it'll be very interesting to see if the price of Ohm drops below that fair value, given the assets on hand, maybe especially, taking out the Ohm component, because if you're factoring in that, then that will decline the most as it drops, if it drops. But I wonder if, we'll see it. If the game theory works out and the sort of fundamental idea of this actually works out, then this really should protect against a further decline. Of course, investors can get irrational and be selling for emotional reasons, but keep an eye on how it does, because it's kind of a cool game theoretical experiment. The related question with Ohm, and I think it's definitely a good one to raise now. Something I hadn't really considered, but as we were talking to the Ohm team about doubling our bond, again, that was moving from $1 million over a month to $2 million. Somebody over there had pointed out, that was Tex in their community, pointed out that the more that we have sort of, quote, inflation, there can be a negative impact in the short term. By inflation, I believe we're not talking about like literal inflation, but sort of effective inflation that arises from kind of introducing Fox to the open market. We're not directly selling it, but of course, these bonds vest. And the thought was if we're dumping all this Fox, oh my God, I don't want to say dumping, but we're selling all this Fox on the market, it's going to really suppress the price. And this contributor to Olympus had a thought on different percentages and the likelihood that things could get a little bit out of control on the price side. I personally, I don't think within especially within the range that we're doing this, I'm not too concerned. I wouldn't want to be doing like $100 million bond or something, but John, I know you had some thoughts, and Willie as well.
Yeah. I mean, I think it was a good point that Tex made, and something that we should always be thinking about is what is the effective, call it. I don't even like the word inflation as it regards to Fox, because usually what inflation means, like with Ohm or with a number of these other projects, really a lot of token projects, they are literally minting tokens and inflating the total supply. So this is not something that happens with Fox. Fox has a supply cap. The DAO has a large amount of those tokens that are arguably not in circulation, and as it puts them out, they do come in circulation. That could be considered a type of kind of distribution-based inflation at any period of time. But also, that cap is known to everyone. It's never going to increase. So it's a different type of calculus. And it also depends what type of inflation is going on, quote unquote. So like, for example, when we're doing an Olympus bond for Fox ETH LP, X amount of Fox is paid out, but X amount of Fox comes right back to the DAO treasury, arguably locked again. So, you can't just look at it as like the amount of output. You have to look at like how much is getting locked up by the treasury, et cetera. I've seen no evidence, at least, that any of our bond activity has had any appreciable effect on price so far. That might be an interesting thing for someone to dive into if they want to look into that info. But generally, like at least the recent decline in Fox price has pretty much gone hand in hand with just the macro crypto and really macro traditional markets all kind of not having a very good 45 days or so. So I don't at this time I don't see any particular concern with the supply schedule that is planned for Fox based on this new proposal that's out there. And I think it actually puts us in a great place to get that distribution very, very low after it's done. So I think the idea here is even if we had to handle a little bit of, call it extra inflation in the short term, if that puts us in a great position long term to reduce that inflation to basically next to nothing, that's worth doing. At least that's my perspective.
Hey, I have a question or something related to that too. And I certainly appreciate that perspective. And I totally think that, or agree that what we are paying out in rewards for various things doesn't really count as inflation because we're not creating new tokens to pay it. And I would still like to see, based on current programs that we have running, how much are we rewarding out as a person, just to like to compare it to inflation, even though we don't call it inflation. I don't know what you call it, but as compared to existing market cap, how much are we paying out in rewards? And then any program that would go to increase rewards, I would ask that it also include like the percentage that will increase.
Ooh, I like that a lot.
So not just have an absolute number, but have a percentage that we can use to help us make more decisions and just be more aware of what's happening with our tokenomics.
I love that. And I think the term that you're looking for is stock to flow. If anyone's ever read the Plan B articles, it's stock to flow, right? Gold isn't getting printed or minted and stuff. It's just existing supply that's locked away or it's not available in the circulating supply, and it's entering the circulating supply. And there definitely is. And this is what Tex from Olympus was saying, is that they've seen some anecdotal evidence, and it definitely varies project to project, but there is some correlation between if you have new tokens entering the supply. Obviously, not all of them are, not 100% of them are going to just be sold on the open market, but some percent will be. And the more tokens you're putting out there, then the more tokens will be getting sold, and that has a direct impact on price, basically. So on the flip side, if you decrease that rate of stock to flow, then just like with these happenings, you can see, if buy pressure stays constant and the new supply entering the market decreases, and the price can go up. And that's what some people, Plan B, thinks is like a big catalyst for each bull market, is these halvings in Bitcoin stock to flow. So yeah, I agree. I think it will be a good thing for us to track. I love the idea of also, when we make a new proposal that will impact that, talking about the percent increase that it will make. I think it's a great way to look at it. And I'm mostly just interested for us to track it, especially as we're about to ramp up the stock to flow as we try to acquire our bonds, which I agree, it's great long-term trade-offs, and it will enable us to reduce our stock to flow in the long term. So there's definitely trade-offs. But yeah, I think the first step, and the reason I brought it up, was just to see if we could at least start tracking that. And maybe that could be a good project for a small tokenomics bounty, Ken.
Yeah, that's a sweet idea. It'd be really nice to just get some clarity around this, and anytime we have we're doing something like this, kind of not really. It strikes me as like a more proactive approach than just kind of like, okay, throw it out there and see what happens. It's more like being able to bottle this stuff. So yeah, awesome idea, Josh.
Hey, another thing that we could, how we could build on that. I mean, I think it's a great idea. It could be a small bounty to just look at what's the current rate. Maybe we could look at historic rate. But then I'm also thinking all this stuff is on chain. All different smart contracts are all paying out these rewards. How about a Dune Analytics page that can measure the outflow of Fox? It should also be able to grab, I think it could, from an Oracle or from some site, grab Fox currently in circulation, and could even like show that trend of stock to flow over time. And then it's all automated. We just pay someone to build it once, and it's not like someone has to go back and like recalculate on a daily or weekly or monthly basis.
Yeah, all that info is on chain. It could even dovetail nicely with our efforts to build a dashboard.
It would totally be I agree. It would be a key component to that. I have a very hard time saying that word.
It totally could be. I do think too, like the Dune Analytics dashboard, we should totally do that in the dashboard, but we might also just be able to do it really quickly with a spreadsheet, because it will be a little tricky for someone to go in and integrate like the farming contract and then the bond contract and then the other issuance from the DAO treasury, and to know whether it's all like whether it's programmatically, whether it's issuance, or if it's just the DAO transferring Fox to the one Fox treasury, which does not increase circulating supply, for example.
Agreed. It should be I'm thinking two separate efforts. That's right. We could do something quick just so we could start to have something that we could have some measure, but then there could be another kind of more advanced bounty, I think. And it'd be a great Dune Analytics page that we could add anywhere.
Agreed.
Yeah. There's a lot of nuance to this too, of like what you count in circulating supply, and even what like CoinGecko and CoinMarketCap is somewhat subjective. So whoever dives into this will need to make a lot of subjective assumptions and be clear about what those assumptions are. And to like Ron's point on the stage, like I'm not sure every Fox out is even equal. Like back to the point of the bond, like a Fox out that equals Fox back in because of both bonding and then reclaiming liquidity mining rewards is not the same as a Fox that's just distributed to a liquidity miner. So I think it's an interesting thing to analyze, but we also have to be careful of drawing too many conclusions without understanding what the assumptions are and how those play into things. It's not as simple as just Fox tokens out equals a percentage. A great example of this is the 50 million Fox that the Treasury deposited in Tokenomics. That was a huge increase in quote unquote circulating supply, but technically the DAO completely controls that and hasn't actually entered circulating supply. But the way CMC or CoinGecko analyzed that, it has. So there's a lot of various nuances to this, and it's a bit harder to analyze than just a simple on-chain Fox out, Fox in.
100%. But I do think we can at least get together all of the Fox that's being distributed to like users all the way into end users, not getting deposited into a one Fox treasury or into a Tokenomics strategy or even like liquidity on a DEX. But I do think, yeah, just seeing that overall level of Fox going out to end recipients, individuals that can sell it, even though you're right, like also there's nuance in the fact that tokens acquired through different strategies and stuff, some are more likely to be sold than others, depending on who the recipient is. But still just tracking that, I think will be, measuring that rate will be valuable.
Yeah, I'm all for trying to track it. I think it's a great effort. I mean, my napkin math is that like current inflation with the current programs is like somewhere between 1% and 2%. And that's very rough napkin math. But again, it's just personally something I'm not overly concerned with, but it would be a great thing for the tokenomics workstream to take on to start tracking that as part of like a dashboard, as Kent has mentioned.
Yeah, my napkin math, I was thinking it was way higher, like closer to 5%, because especially we're about to top up like the bond contract with 10 mil, and that's even not including the liquidity mining rewards. But just that 10 mil, isn't that supposed to last like in total about a little over a month?
That 10 mil will last more than a month. That was to the end of the bond program. Right? But yeah, it's around that plus the liquidity mining rewards was about my math. I think that gets you to around 2% or maybe a little over 2% of current quote unquote circulating supply. Again, depending what you use the circulating supply number going off of like what CMC and CoinGecko use.
Totally good discussion. We'll definitely, if we do a bounty for it, we'll require putting some thought into the spec or just delegating that thought to whoever picks the bounty up.
Stock to flow, not just for maxis.
Fox to flow.
Fox to flow. Oh, that's brilliant. Yeah, that's this will be a interesting area to dig into, and we certainly have money allocated for bounties in tokenomics, so we can find out ways to get those sort of things produced. The challenge, I think, as John mentioned, is it is very nuanced. So we would want somebody to kind of very clearly articulate exactly, or really scope it out, just so we get exactly what we want built in terms of those metrics. But yeah, it's a sweet idea. Let's see. Cool. I was gonna, if you guys don't have anything else on this topic, I was gonna move it along.
Sounds good.
Awesome. I agree, Marley. The fox must flow. So yeah, the last thing on my own agenda is an idea that I kind of brainstormed in my head the other night. It occurred to me that basically, we're doing a number of things in tokenomics. Something I had overlooked is R&D, and this is for those that don't know. Like I used to do R&D at ShapeShift, and I've always thought it made sense under the tokenomics banner as well. So I wrote this in the tokenomics workstream. I'm just going to read it verbatim because I feel like it's a good sort of explanation. R&D is, of course, near and dear to my own heart, having led the R&D efforts at centralized ShapeShift. Our research focus is super important at the DAO as we consider whether to integrate or use new protocols, platforms, and technologies, as well as develop a better understanding of emerging trends that could impact the DAO's overall strategic direction. With that in mind, I'm excited to announce the creation of ShapeShift Labs. So ShapeShift Labs is basically kind of part of the tokenomics work stream that will be dedicated to research and experimentation. So what exactly does that mean? Research entails incisive analysis that can help us make smarter decisions. Potentially, the DAO could also release these reports as thought leadership pieces. That worked well for the pieces I did at centralized ShapeShift. It was a nice way of exhausting that content. On the experimentation side, this might entail earmarking a small portion of funds to mess around with novel DeFi strategies and develop learnings about their risks, rewards, and challenges. There's a lot we can do. So really the spirit of this labs idea, as Dexter would want to advocate for, is let's make sure that we're always we're always being mindful of where things are going institutionally, institution sounds like kind of a dirty word, but like as a DAO, as a community, I want to make sure that we have, we're well positioned to react to different things. For a great example would be like, bridges across layer 2s or from layer 1 to layer 2. Do we have the insight as a team to be able to make smart decisions around that sort of stuff? Could we even help the product team based on our knowledge? This is stuff that R&D did at centralized ShapeShift, and we could play a similar role here. So specifically, or to use like a more specific example, the Grow team approached us. You might recall that we had a few of their team members talk during Tokenomics a few weeks ago about their proposal to use their risk-tranched stablecoin. They were proposing that we take a chunk of our TMDC allocation and put it towards that. There's a lot of nuance there. There's a lot of depth there. When you're talking about like not just a stablecoin, but like the risk tranching, it gets fairly complex. And really, we needed somebody to take a look at it and apply some incisive analysis and make recommendations about how to move forward on that. Because the Grow team, they did take the time to create this proposal, and we want to vet this in a timely fashion. So our first instance of action in the ShapeShift labs is the TMDC's own Professor McCarthy has taken a bounty to analyze that project and that proposal. So thank you very much, Professor, for jumping on that. But this is really emblematic of, I think, the kind of work that can happen on the research side of things. There's going to be a lot more potential integrations and proposals coming down the road. And having smart minds in the tokenomics workstream to vet these things and look at them will be super important. And we have a budget allocated every month for these types of bounties on the experimentation side. So this kind of arose from a great chat we were having with Decentralized J and the tokenomics workstream about some more novel types of DeFi strategies, like on the Cosmos side, using like some of the Terra, the Anchor type stuff, and interesting, discussions about risk reward profiles around that. We're not really here to be just like uber degens. We're not like a hedge fund that's making crazy bets, but I do think that there's some room within the scope of tokenomics and maybe the TMDC itself to allocate at least a portion, like a relatively small portion, maybe to higher risk, higher reward strategies, or at least experiment. I don't really have any further ideas yet. I haven't articulated ideas, but I do feel like experimentation with, maybe not a ton of money could at least develop some learnings, and that was kind of falling under that as well. So yeah, LPX, totally, kind of like an incubator. The one thing this doesn't entail is like literally incubating a project in the sense that, we have engineers working on it. Engineers are a precious resource here at the DAO, and they're working on the platform, and of course there's Fox Chain. But over time, like eventually, that would be great to have some engineers developing unique things too. That approach worked really well at centralized ShapeShift, where we built or we incubated a project called MicroTick, a short-term options trading platform built on Cosmos, and that was great. But again, that did take engineering resources that we don't have right now. So I just want to make sure that there's there's a place for different types of strategies, and I want this to be a really fertile environment for interesting discussion, like the type of degen type shit we were talking about in there with that, with that anchor idea. That's exactly what we need more of. I think the more degening insight we can get in tokenomics, the better. Yes. I mean, that said, we're not about to ape into something, with like, 900 billion APY might be a little bit risky, Ron, but yeah, I appreciate all the discussion around that. So, again, I don't really have anything super articulated in terms of how this might live and breathe alongside our other initiatives, but just know that there's a space for this. There's funds set aside for for this type of thing, and I think we can continue to grow and evolve. And that's actually it for me. Does anybody have more thoughts, questions? This would be a rare tokenomics chat that wraps up early.
So I know something along this lines, and sorry, I just got a phone call, so I unfortunately missed some of the labs talk, but just trying to catch up on what I saw on the DAO stage. But I do have sort of along the lines of what Ron and I were talking about at the last tokenomics meeting around incubating other projects in the ecosystem and things along those lines that the DAO can do related to the silo investment that the DAO Treasury did. I have a proposal brewing that I hope to maybe have out the door by the end of this week, certainly early next week, if not that I've been working on. That will be coming along those lines, so I look forward to discussing more along that and how something like that could function to support what you're talking about, Ken.
Yeah, John, I'm really excited to see that proposal, and it fits really nicely into this idea of, we're thinking about Silo, for example. That was us taking a kind of effectively like an early stage kind of seed investment in a project that hasn't really launched yet, and the more that we can actually